taking different shapes and forms. So I want to make sure that we have a chance to touch on S corporation and C corporation and its differences today. So before we get started, little things about our firm and our CEO. With more than 25 plus years of history, Community CPA team is proud to speak more than 10 plus languages, serving 10,000 clients worldwide. So Ying is our CEO and managing partner. You see her on these webinars all the time. And I get a chance to hear from a lot of you that are new, that's joining our firm, about how wonderful her webinar is. So we have started this webinar ever since day one of the pandemic, and we're going to continue as long as we see that it provides value. And so you know all about Ying and her book that's coming out. And 10 a.m. is the one coming up, which is Growing Your Business, after the first book she launched, which was 8 a.m., starting up a new business. So Ying, as you know, serves on the National Taxpayer Advocacy Panel for the IRS. And we're all about how to help our clients grow and understand taxes, understand accounting, understand everything that needs to be known about business. And so hopefully you continue to use our channel to further your knowledge. So this no responsibility disclaimer is something, as you know, we have to disclose all the time. So bear with me, but Community CPA, as part of our services to our valued clients, are providing these seminars in order to and for our businesses to cope with the pandemic and beyond. We're not responsible for any damages the attendees may suffer as a result of following any of the advice or information provided. Although we are doing our very best to stay informed, the current situation is very dynamic, it's always changing, it's fluid, and the information could change at any time without any notice. So please keep that in mind. Our information and advice are not legal in any nature, so should not be construed as such. Please consult your legal counsel if you should need any legal advice. So this is for purely entertainment, and hopefully you have a chance to learn something and apply it. What is this corporation? There are two types, as I mentioned earlier in their title. First one is the C-Corp. C corporation is a business entity that is taxed separately from its owners. So C corporation, unlike an LLC, which we covered last session, is completely separate. Okay, so C corporation files its own taxes, pays its own taxes. Okay, and in contrast, S corporation, like an LLC, does not pay taxes, but it flows through down to your personal taxes. So shareholders do not need to be an individual for a C corporation. It could be a corporation and a corporation alone. So a lot of times, a lot of people that are foreigners create C corporations because it doesn't have to be an individual residing here, right? So tax, it's on tax on the corporate level, and corporate income is paid first at the corporate level, and again at the individual level if you do decide to issue dividends. Okay. Pros of being a corporation: owners are separate from legal liability, so they're not entirely responsible when faced with legal issues or debts. It's flexible for its owners. Less likelihood of being audited, going public, having the ability to sell stock, raise the likelihood of acquiring financial capital. It's well-established structure. It's the most matured structure with defined roles, accountabilities, and agendas. And employees may have option to buy stock at a fixed price and receiving stock benefits as well. So let's talk about the cons. Cons of a corporation. A lot of paperwork needed. It's a lot of regulations. It tends to be less flexible at times. Possibly double taxation. That's where you pay income tax, pay dividend tax. But we'll talk a little bit about that because you don't always have to issue dividends. Okay. So on the overview, let's talk a little bit about the two differences. We already covered C-Corp, but pays its own taxes, files its own taxes. S-Corp files its own taxes, but what? It flows the profit and the losses, it flows down to the personal taxes. C-Corp, flexibility in reallocating income and loss. S-Corp, not so much. We'll talk a little bit about that later. Payroll is not needed for C-Corp, whereas S-Corp is required. And stock options, public shareholders, C-Corp, S-Corp, only up to 100 shareholders. Some limitations there. C-Corp issues dividends, S-Corp has distributions. So what is an S-Corp? S-Corp is a corporation like a C-Corp, and that elects to pass corporate income, losses, deductions, and credits through to its what? Owners, shareholders, for tax purposes. Shareholders of S-Corp report the flow through of income and losses on their personal tax returns and assess tax at the individual tax rate. Mentioned that. All goes through. Everything goes through from company to personal. And whatever is your share, you get to take that in a form of a K1. K1 is like a W2, but for owners, right? So this S-Corp will allow you to avoid double taxation at the corporate level, at the corporate income tax, okay? S-Corp can it be an LLC? So limited liability company or LLC can elect to be taxed as an S-Corp. So does S-Corp sound like something you're interested in? You can be one if you're an LLC. You can elect to be one. Okay, we talked about elections, right? We talked about LLCs, sole proprietors, partnerships, S-Corps are all pass-through entities for tax purposes, but they are not taxed the same. They're all different. But what are qualifications, if there are any, to be an S-Corp? To qualify, the corporation must meet the following requirements. Be a domestic corporation, a corporation incorporated and operating in the United States. Can't be for a domestic corporation in the US, but a foreign corporation elsewhere. Okay, have only allowable shareholders. We mentioned this. Okay, maybe individuals, certain trusts and states, but may not be partnerships, corporations, or non-residential alien shareholders, and no more than 100 shareholders. That's the limitation. And only have one class of stock. Okay. So how is S-Corp taxed? There are 3 steps. First, the corporation files business tax return called 1120S. Okay. Then each shareholders share their profit and loss that they are responsible for, and is recorded in their personal K1. K1 is information for each shareholder is reported on Schedule E of the person's individual income tax return, and that's where it's taxed, okay? Pass-through impact on 1040 and its implications, okay? So the owners of S Corporation pay regular income tax on their distribution, but they're not considered to be self-employed, so they pay no self-employment tax in this distribution. Remember, LLC, you have the self-employment tax, okay? So that's that 15% we talked about last time. If you become an S-Corp, you kiss that goodbye. If you become a C-Corp, you kiss that goodbye. So basically, if your company is a corporation and it's taxed as one, you don't pay self-employment tax. So if any of the owners are also employees, they receive a salary, right? Which FICA tax, Social Security, and Medicare tax are withheld. But S corporation owners may be eligible to take a qualified business income deduction, which is QBI. You heard of this if you talk to tax preparers. But today you can deduct up to 20% of their business income. So this deduction is an additional to your normal business expense deduction, the S corporation can use to reduce its taxes. The QBI deduction is taken off the owner's tax return, not the business tax return. Okay, so get additional reduction. But many S corp owners work in their business, and some try to avoid taxes, right, by not paying these people as employees. And the IRS watches closely to make sure they receive reasonable compensation. We'll talk about that here in the next slide. But which includes paying Social Security, Medicare taxes on this income. So employment tax savings, reasonable pay, there's really no right or wrong answer, right? Just really what IRS deems, what you deem is appropriate for the job that you do. So the best answer is the one that you have done research and you have professional to determine it for you, get a second opinion. But basically, let's say you get a $10,000 distribution versus $10,000 salary. And the difference is $1,520 as far as your tax differences and savings. So there's some benefit to that. Okay. How to become an S-Corp? Understand the pros and cons. You have to understand this. Operating flexibility. Members versus shareholders, resident or U.S. citizen. Profit and loss distribution, employment tax, foreign status. LLC is not recognized globally, so you may be taxed as a corporation in other countries. And S-Corp is a corporation. Okay. Remember, I told you that you could elect. All right, you could elect to be a S-Corp, and you can do that election through this form 2553. And a new corporation must elect S status no more than 2 months and 15 days after the beginning of their first year. If so, you are after this period, you need to file a late, revocation filing with the IRS to get this being approved. For existing corporations with prior taxes filing, Form 2553 after this 2 months and 15 days deadline will cause your election to pass and cause you to be late. Okay, so special provisions to retroactively elect. So take it back, and those provisions are: the entity intended to be classified as an S-Corp and failed to qualify as an S-Corp solely because the election was not timely. The entity was reasonable cause for its failure to make the election timely, so you got to have that reason and explanation. The entity and all shareholders reported their income consistent with the S-Corp election. So you can't have one person doing one thing and another doing the same, but everybody needs to do the same thing. Okay. In effect, for the year, the election should have been made in all subsequent years. And lastly, less than 3 years and 75 days have passed since the effective date of the election. So that's how far you can take it. You want to keep these things in mind. Otherwise, you're going to be wasting a ton of time. You ask, how much time can we waste? That's a good question. In our experience lately, it's about 6 to 8 months for IRS to receive your election, to process your election, and to accept your election, or deny your election. So if you do these things wrong and you fill it out incorrectly, just because you go somewhere and you don't like their price and you say, hey, I'm going to do it on my own, and you try it, you might waste your time because you're just going to be surprised and get a letter after 6 to 8 months of waiting, only to be told that your form 2553 was filled out incorrectly. So that's not what you want, right? And that's not what we want. So just make sure you consult a professional when you fill this form out. It looks so simple, but there are little things that could cause issues, and you want to be safe than sorry. Okay, so 2553, keep that in mind. Now, revoking the S-Corp election. Let's say you say, Dan, S-Corp sounds good. I want to be an S-Corp, and we get the election done for you. And then 1 year later, you're like, Dan, oh my goodness, I made a mistake. I don't want to be an S-Corp, and I want to be a C-Corp, and our company has already changed. But, I heard your webinar, and I heard that you said, I have to wait 5 years. I can't wait 5 years to go from S-Corp back to my C-Corp. What can I do? So revoking an S-Corp election is what you would do. And to revoke a subchapter S-Corp status, you have to have a statement. And it's called a statement of revocation to the service center where you file your annual tax return with the IRS. So, the statements need to include these 8 things. And we really wanted to include as many things as possible that we think is so vital for you to include, otherwise they're going to be rejected. I've seen someone try to revoke their election status, S-Corp status, for the last 5 years. And so the last 5 years, their tax return couldn't be filed properly. IRS is chasing them, and they're chasing IRS, trying to tell them, hey, we're not an S-Corp. We changed to be a C-Corp. Well, IRS says, no, you didn't do it right. You didn't make the request right. So these are the things that you need to make sure it gets accepted properly. Corporation revokes the election made under section 1362A. You need to clearly state that in there. Your name, address, social of the shareholders must be included, number of shares of stock owned by the shareholders, the date or dates on which stock was acquired, the date on which the shareholders' taxable year ends, the name of the S-Corp and the EIN, obviously, and the statement must be signed by shareholder or shareholders under penalty or perjury. Indication of effective date of revocation, so important. You need to put the date in which you wish to revoke your S-Corp status and signature of person authorized to sign the return. So keep this in mind, otherwise, it might not be accepted. So due date of the revocation. If revoking your S-Corp status, you have to remember that the first day of the tax year, the revocation is due by the 16th of the 3rd month of the tax year. So revoking January 1st, 2023, then you must send the statement on or before March 15th, 2023. So just keep that in mind. So that's 3 months, 16 days, okay? So if revoking an effective any day or other than first day of the tax year, the revocation must be received by the IRS by the requested effective date. So for example, the S corporation is on December 31st tax year. It's a calendar ending year, all right? So it's just like a personal. And this requests a revocation effective January 1st. The revocation is due March 15th. The S corporation is on December 31st tax ending year, and the request of revocation effective February 14th, that the revocation is due by February 14th. So you just have to kind of keep that in mind, okay? Consult a professional. These due dates are important, okay? All right. So comparison, again, let's go over everything as we wrap up here. C-Corp and S-Corp. C-Corp pays its own taxes. S-Corp files its own taxes, but does not pay its own taxes. It gets passed down to the owners, and you pay it at your personal level. Flexibility in reallocating income and loss, whereas S-Corp, not so much, not flexible. C-Corp, payroll is not required. S-Corp, payroll is required. Okay, stock options. Public shareholders. S-Corp, only up to 100 shareholders. C-Corps issue dividends. S-Corp has distributions. So folks, that's everything for today in regards to C-Corp and S-Corp. Hopefully you found the information today useful, helpful. If you have questions, feel free to email Catherine at communitycpa.com. We want to hear from you. We want to see how we may be able to assist you. You can call our office, 515-288-3188. We're open Monday through Saturday, 6 days a week from 8:30 to 5:30. And all of our offices are connected through this number. So feel free to call that number anytime. And we'll be more than happy to hear about you learn about you and see how we can work with you and to grow your business together. So we appreciate you tuning in today, and we look forward to continuing these webinars and seeing you here in this platform and in person or in Zoom in any way, shape, or form as needed. So thank you. Have a good rest of your day. We'll see you soon. Thank you. Bye-bye.